Good morning, Stocktwits crew. Happy FAFO Friday. It's an interesting morning this morning. Just when you think we can get away from all the tariffs and all the heavy impactful stuff for the market, they come in and slap it for a good morning and surprise everybody. So, interesting market this morning. We just tanked. What is this? Four,
Percent
almost
now.
500 points on
Yeah.
the futures. Yeah, pretty nasty. Michael Nauss. Obviously, it's been a crazy week so far, and then seeing this morning, how are we feeling about this?
We were talking about before, I am just very excited to see what happens in the interim when we get our new positioning data on the weekend, right? Because the big guys were net short as of Monday. It would be the most hilarious thing ever if they bought all week to get long, and then this is what happens. But right now, as far as we know, the big guys are still short out there, so it could be their chance to cover, and we could get a little bit of a bounce here. That's what I'm looking at. But I this is finally information. We've been straight up, and it's hard to get information from the market when it just goes straight up. I think the best information comes from the market when you dip. Do people come in and aggressively buy the dip, or is it one of those where they let it go for a couple days, or what ends up happening here? So I think, as someone who's long stocks, it's not going to feel fun on the open, but I think it's going to be really good to check out what happens next. I think this is going to be the best information the market's going to have given us in like a month.
Yeah, 100%. We got Bitcoin ripping too. Last night we hit about 112,000. So all the Bitcoin maxis out there, they're loving life. I actually live with a few of them, so they were all screaming last night, waking me up. But yeah, crazy stuff on crypto in terms of that. Meme coins coming to the White House. Market slipped Thursday as bond yields surged and the House passed Trump's sweeping tax bill, a combo that's making investors nervous about deficits. Meanwhile, a meme coin dinner at the White House seriously turned heads as Trump X holders, including Tron's Justin Sun, met with the president. Not a single sector closed green. Utilities led losses, and retailers are now split on how much pain tariffs will bring. Do you have any thoughts on that dinner they had, Michael Naus?
Uh, I'm Canadian. I always like to preface that anytime we talk about your president. That's very divisive. So I don't have a dog in the fight. Seems wacky to me that you can actually buy. I would thought that would have rallied this Trump coin way higher, because I'm thinking about it. If I own Coinbase or something like that, it's worth it for me to plow 10, $20 million into this coin just to be able to hang out with the guy who's setting the regulation and runs the rules. So the shocking part of this, more than anything, is that this hasn't moved higher. But it's a very nice looking chart, right? As a chartist, it's now something that I think you have to pay attention to. Now that there's some utility to it, that he's gonna, at least try to pump it somewhat. 'Cause, we've got this little wedge going on here. I'm just shocked that was a bit of a sell the news event and not so much any kind of a rally. But if we break over 15 here, I might have to get involved and buy some.
Yeah, I would have expected the same thing. Definitely a bigger rip on that. If you deleted the Trump USDT behind this, I would think this chart looks pretty solid, But the fact that it's meme coins scares the hell out of me. So,
Yeah.
but yeah, I mean, obviously opportunity everywhere. So keep eyes on it. We'll see where that wants to go next. But I don't know how positive I'm thinking about all the meme coins. We'll see though. IPOs are back. HNGE up 17.38% and MNTN up 64%, lit up the Nasdaq in a major sign of IPO life, which I don't feel like we've seen some big IPOs like that, Michael Naus. Maybe you can enlighten me if we have. But Hinge Health raised 437 million for its chronic pain platform, and ad tech firm MNTN surged 45% out of the gate. You got any thoughts on that?
Generally speaking, that's actually not a good sign. If you go back in history and you look, and I'm not going to say this is a flurry, it's only a couple, but when there's a flurry of IPOs, that can be kind of frothy, potentially toppy signs. I guess the best example that most people remember is SPAC Mania. That was definitely a signal of the top, where Chamath and others were bringing all these really junky companies to market that had no reason to ever be public, and now you have a bunch of them bankrupt, right? 23andMe and WeWork and bodybuilding.com and the scooter thing. There's just tons of these companies that come out and they have these big promises and they tank. So I haven't looked into these companies enough, and as a technician, there's no data to play off them. But the only thing I remind people with IPOs is that 80 some odd percent of the time, an IPO will undercut its IPO price before moving higher. So again, not 100% of the time, but if you're caught up in the hype right now of some of these, that especially this one that's pushed quite a bit higher, just remember that stat that you have an 80% chance that this thing will be under whatever the IPO price was. And just do with that as what you will, but that's always something I do to kind of calm myself. I get too excited of a new business or something coming out.
Yeah, I obviously don't have too much time under my belt, but just in the short 5 years of me trading, I think the only two IPOs that I've seen IPO and just run are ARM, which I don't even know where that chart's at now. Would love to take a look at it. Yeah, geez,
still,
look at that.
right?
Still holding up. So there's ARM and then Reddit. Reddit is like the two in my stock market lifetime that I've seen that have actually done well straight off the IPO print,
Right? ARM here is a perfect example, right? IPO'd here, still pulled back.
It's still pulled back though
real
before.
rip.
Yeah, exactly.
There are traders out there, more in the past. There's less now because there's way less IPOs than there used to be, that just trade this. Right? That just this is their whole thing, is they look for IPOs, they wait for that 80% probability that they're going to undercut the IPO price, and as they'll mark this kind of IPO candle right here. As it starts to break back up through there, they're buyers with stops and the lows, right? I don't know if Reddit did the same thing, but again, yeah, it did.
Same
so this
thing.
is
Yeah.
very, very common. And generally what you're seeing is it's not a mysterious phenomenon. What's happening is that the reason a company generally IPOs is A, they need money from the market, which means they're going to raise it on the market, but B, there's a lot of owners and early investors that need exit liquidity. They need people to buy. So that's why you have that 80% chance that it comes down, because if I was an investor in Reddit for 20 something years plus before it came public, and I see that I can now take the millions of dollars I have and turn it into cash and buy something, where I was stuck with just being a paper rich guy before, I'm going to ring the register. Maybe not all, but some. And you get enough people doing that, and again, you get this undercut and then rally back through. So it's an interesting strategy. It makes sense as one, especially if you're really hyped about the IPO, to take a look at. Is if you get that first dip while the insiders are selling, and then you buy it when they're done, and then you get that recovery.
Yeah, absolutely. Can't ignore those IPOs, man. What else we got on the radar? Last week's eToro pulled in $620 million. Jeez. And with Tiger Global and Insight Partners back in this week's debutantes? What? I'm speaking Spanish too much over here that I don't even know how to say that. VCs are finally exhaling. IPO drought may be over. Stocktwits sentiment is bullish on both of these names, so love to see that. I don't know if you have any thoughts on that, Michael.
Well, the benefit of there is being an IPO market is that there's just more exposure and diversification people can do, right? It's like I forget, there was one weird penny stock that ended up doing some deal with OpenAI, and it ripped. And it's the problem is people are trying to get exposure to some of these private companies that are making all the money out there, and they can't. So as these things become more public, again, it just gives us opportunity, more things to trade, more ways to express ideas and thesis on the market. So overall, a good thing, right? You just got to remember that don't be the exit liquidity that's like super excited to chase these IPOs higher.
100%. We got solar. Some more stuff happening with solar lately. Sunrun was down 40%, Enphase down 20%, Solar Edge down 24%. All these names tanking after the House's tax bill killed incentives for leased rooftop systems. Utility scale names like Array and Nextracker also dropped. So interesting stuff there. Analysts warned the bill could erase $220 billion in solar investment by 2030 unless the Senate intervenes. It's being called disastrous for the sector, just as tariff pain and subsidy rollbacks amounts. Stocktwits community is still extremely bullish on the solar. I used to trade Enphase a ton, Michael Nauss, but ever since kind of the new year and like into the end of last year, I haven't traded it much. It was kind of, to me, a very political type trade, whether or not who was going to win the Avis. I think solar could have gone a very different way if things went differently. But I mean, we saw the Trump trade happen with like Tesla, Coinbase, and names like Solar not doing so well. So I don't know. I don't see too much opportunity there. Do you?
Well, no, because you don't want to fight the government, right? So as someone who is getting solar installed on my house, and the reason I'm doing it, the only reason that I'm doing it is because up here in Canada, especially, right, obviously solar in Canada doesn't work as well as where you're at. I see a nice, beautiful sunny sky behind you. We don't get those very often, but the only reason it works economically for me to do that is because they're giving me zero interest loans on it. That's what they did in Canada. So if you put solar on your house, you get a zero interest loan to finance it. So then it just becomes do I want to pay the power company $500 a month, or do I want to pay on this zero interest loan $500 a month to power my house? Without that, no one's going to get solar, and with that, everyone's going to get solar. So it's just really, really hinging on whether or not there are, some sort of tax breaks or some sort of reason to switch off of traditional power. So yeah, these companies are very reliant on that, and if that's going to be taken away, then I don't really see a bottom for these. Now, what will happen is, if you said the Senate, again, I know nothing about how laws are passed down there, but it seems like there's a chance that this bill will be overturned. That would be the thing to watch, because if that does, then you could probably see them right back up and maybe even higher. But yeah, you don't fight the Fed and you don't fight the government. If the government does not like your sector or your stock, you got to step aside. You're not going to win that battle.
Yeah, I agree. Definitely don't wanna fight that. Not a winning move, at least in the past, as we've seen. So. Quick note, Trump to sign orders to boost nuclear power as soon as Friday, sources say as well. So that plays into all that as well. Hey, have you seen any opportunity in nuclear names, Michael?
I am in, just full disclosure, I'm in some SMR off of, so we were talking about this too, right? This is the IPO, right? So this one undercut its IPO, rallied. I've bought this a couple times.
This happens every time, man.
80%. It's a pretty common one.
Yeah.
So what I do, we were talking about Brian Shannon in the green room. This is the anchored view app from the IPO price. So this is the average price of everybody who's traded SMR since it's existed. And when we held it right here and started to move off it, I got a little bit around the 17-ish area. I like it because it seems like it's the exact opposite of what we're talking about. I also have some of this NLR, which I think is a good way to play it. It's got some of the small nuclear guys, some of the big nuclear guys, and uranium as well. So it's a good pure play on the uranium sector. And I like it, again, as someone who's, if you're going to power all of these data centers and AI and whatever, we're seeing it's not going to be solar that does it, right? You're going to need a big and consistent power source. And nuclear seems to be the play. And in this market, anything that is getting near all-time highs, I think is something you have to watch, right? I think S&P 500 is now, 6 or 7% off of all-time highs. So anything that is right near all-time highs, that is relatively strong. And I think you definitely have to pay attention to these nuclear names.
Yeah, I haven't dipped into any yet, but definitely loving the way this chart looks. So healthy. I mean,
it's a good ETF to do, yeah. Right? I like this because what I worry about with, and that's why I have this as on top of NMR or SMR, is there's like a lot of these OKLO and NNE. There's tons of different nuclear names out there, and I'm not smart enough to know which one is going to do well and which one's going to do poorly. So NLR, again, gives you exposure to the small nuclear reactors, the big guys like CCJ. It gives you some of those as well, and then it just gives you uranium. So I really, really like, as the more my beard gets gray, the more I like thematic ETFs, because then my bet is just that nuclear is going to be a thing over the next few years. I don't have to bet that, which company is going to be the winner and which technology is going to do well. So I'm in some of this here as well from like 80, and I've got to stop at the major swing low, and this is like a hold it for a couple of years and see what happens.
I think that's the best bet for people as well, and someone like myself that's more focused on the intraday shorter term charts, you know what I mean, and the day trading side of things. Mm-hmm. I think just follow, if you like the sector, right, find the best ETF you can find within that sector and, take a shot. I think the more and more I get older, Michael Mouse, which is, I guess, makes sense, But I want to take less and less risk in actual individual names. I am by far like no problem with being heavy risk in the market, but it's harder and harder for me to want to own a ton of individual names when I can just put that risk on in the S&P, put that risk on in ETFs in a sector that I really like, and just feel better about it, especially because I'm not. Again, when you're holding individual names, right, you're susceptible to everything that's happening with that company. And I mean, something happens that's catastrophic, you can get screwed up. Whereas ETFs, if something happens with one, you got a bunch more to deal with. So I don't know. For me, I'm really focused more on the ETFs on the long term side of things, which means I might miss out on some opportunity for individual companies. But I don't know. I just don't care, to be honest.
Well, and this is a superpower that you guys, I just feel like an old man just here, just crying. Right back in my day. But this influx of ETFs is relatively new,
Yeah.
where you have an ETF to express pretty much any idea, any thematic idea you have on the market. And you're right, you're capping upside return, but you're also capping risk. So with like my SMR trade, how much would it suck? And this is how I always look at especially long-term investing, is regret minimization. How much would it suck if I am totally right that nuclear is going to be the thing that power the entire world in the future, especially with AI and everything that we're doing, but then SMR is like cooking the books, right? So I lose all of my investment in SMR because of some shady accounting thing. I'm not saying that's happening. I'm just saying there's a chance of that. Whereas holding NLR, it goes up as well. So yeah, I think it's a combination of A, the older you get, the more you like these, and B, the more money you have, the more,
True.
it's the more wealth you have, the more less YOLOs you're willing to take, and the more you're doing. So yeah, I agree with, your S&P 500 is like your main investment, and then you have satellites that are riskier. So NLR would be a little bit riskier, SMR would be a lot riskier, and then the further you kind of get away from that core, you're allocating less money because you're having just a little bit more upside potential on these kind of like bets, I guess you're taking more than anything.
Yeah, 100%. I will say I do feel a little bit of FOMO with this market, with me only putting in about a third of my cash on the dip, especially being as young as I am. It definitely stings a little bit when I look at this chart now, but I'm also not going to be investing in this area for the S&P and QQQ. So for me, I'll wait as long as I need to for another bear cycle, quote unquote. I don't even think it's funny. A lot of us, even myself, was coming out, and during this big downturn in the market, I mean, a lot of us thought this kind of turned into a bear market. I would argue that it never was. You know what I mean? That was just a huge
like for 2
sweep
days.
of liquidity. Yeah, for 2 days to stop a bunch of people out in their long terms, and look at what we're doing now, right? So that's where I was definitely wrong there, and those thoughts can kind of cloud your judgment for the long term. But at least we took a little bit of a shot, and I will be extremely patient and wait for those other opportunities, because they will come, right?
Yeah.
SPY will be down 20% again at some point. QQQ will be down 20% again at some point, and that's when I'll be buying again, right? So
Absolutely.
We'll see what happens there.
As soon as everyone FOMO's in, like if I could have the positioning of like the retail accounts, all we can do is positioning of institutions. But as soon as you see that retail cash like hit zero, that's generally the top, because the institutions are like, okay,
You
I've
see
got
the
my
whites of their eyes, huh?
Yeah, exactly.
Yeah. We got some other noteworthy pops and drops that have been happening throughout the week. Advanced Auto Parts, AAP, is up 57%. That's huge. Big guidance, but be overpowered a weak quarter. What's that looking like on the chart for you? Jeez. Nice.
Yeah,
Trying to break out of that trend line, huh?
That's what, yeah, you can see I was looking at this yesterday, and I love, as someone who doesn't, as I'm a CMT, as someone who doesn't pay attention to the news, I love when I see the news just completely switch a direction of a trend, right? And that's what I see happening here. And the question is, can we kind of stick this $50 area for any length of time, and then through that, fill the gap, and then maybe this was a bit of a climactic low down here. But yeah, it does seem that it could change things, and I don't know what they're doing that, right, AZO is the complete opposite of. So maybe
They're
a little
doing
bit of
something
catch-up.
right.
Yeah. So it's
Jeez.
like, if AZO proves that this auto parts market can be lucrative and your stock can go up over time. So maybe AAP has learned a little bit from their competition, and maybe they'll start they'll start that trend as well. I don't know, but it's a nice little downtrend breakout to keep an eye on.
Yeah, definitely. It's funny, a thought just popped into my mind. Talking about like auto parts, I always think of like some older guy that maybe doesn't know much about stocks, like bought AutoZone way back. Some blue collar worker that
Yeah,
just
it was,
drives a truck to work every day, digging with a shovel, and he looks at this now and is like, damn. I mean, it's funny. I just imagine there's people out there that have like invested in things like this. I only think this because, the other day we were in this Uber and the guy, we were talking about Bitcoin with the Uber driver, and he mentioned to us he bought like a few $100s worth of Bitcoin like years ago and hasn't looked at it. And we were like, brother,
yeah.
you need to check your account. We're at all-time highs right now. You need to check that. And he checked it and he was freaking out. Like he's got a nice lump sum of money sitting there. I just thought that was funny. And I imagine that, stuff with like AutoZone and names like this, kind of Costco. I have a few, my dad has a few clients that have just been investing in Costco forever. They live off Costco. It's just crazy to me. I think about some of the people that might have, some shares sitting there and they might not even realize where this is at right now.
Well, and that's the Peter Lynch old school style of investing, is you just buy companies that you like. And I have a buddy of mine, Option Sean, I guess he is on Twitter, and he's been doing this with his kid, who I think is like 8. He's been doing it with his kid for like 4 or 5 years. And the idea is that if his kid likes something, he has to take him to the computer and make sure that the company is profitable, and if so, he's got like a small Robinhood account for him, a couple $1,000s that he's buying these stocks with. And I think it was 2022. He tweeted at me and he said, "My kid is beating me in returns. I am a professional options trader, and on percentage gains, he's beating me." And or probably 2021, because he had Roblox and like all this stuff that kids would be interested in. That was just
Crazy,
absolutely
man.
rocketing. And he's like, "Yeah, my kid at this moment, his returns are better than mine, and I'm mad about it."
So the real alpha with investing is just have a couple kids and let them control things, huh? That's what it sounds like.
Jay Woods always said his he had 2 daughters, I believe, and he's like the floor governor for a long time at the NYSE. Market maker, obviously a pro trader, and he's saying some of the best trades he ever put in was his daughter saying, "This is the cool thing in school now that all the
so funny, man.
that all the girls are doing." And you find that because what's going to happen is whatever the popular girls are doing at school, all the other kids are going to go to their parents and say, "You have to buy this thing." And I think it was Lululemon at the time, way back in the day, and he's like, "Yeah, I had a couple of these trades that just were monster winners, and it was just because I knew that every parent in the world was getting bugged by their kids to say, go buy this," and right, it makes a lot of money.
Yeah, it's funny. It's funny that it's funny because it's not even a joke at the end of the day. Like, you have to be aware of what, your girlfriend, your kids are all buying, because it can very much be opportunity for us in the market. As much as we laugh about it and joke about it, it's actually, a real way to kind of capitalize. So love hearing about the thoughts there. We had Snowflake earnings the other day. Beat expectations, up 13.5%, multiple price targets, hikes, push shares back above $200. So love to see that. I threw out a little chart on Twitter before the earnings, just kind of seeing what we want to see there. I was looking for that break higher out of the consolidation that we were kind of sitting in on the daily time frame. Still looking for this thing to keep it going, but we're in that gap now. So I don't know if you have thoughts there, Michael.
This chart's just a mess, right? It could be. And whenever I see these low bases, right, I always remember Louise Yamada, who's a famous technician. She just coined the phrase, "The bigger the base, the higher in space." So if it can't go down for a long period of time, then that could be accumulation from giant funds and institutions, because this hasn't gone down forever. It also hasn't gone up forever. So yes, it looks like it could be kind of launching out of this 200-ish area that's been resistance for a long time. Through that, if it gets to 250, then you're shooting all-time highs at 400, which is like a double. So it's a good looking base. It's just one of those, I have bought the high end of bases many times and gotten crushed each time. So if you like it for whatever fundamental reason, this could be just like the biggest accumulation zone that I've seen in a long time, and good luck to you if it goes higher. I'm the kind of trader that as it's on its way up, I'll be just buying, dips and doing things like that, not so much guessing on the actual base breakout. But it's a totally valid strategy to have.
Makes sense. We had BYD surpass Tesla in April EU EV sales. Tesla dropped 49% year over year. BYD jumped 359%. That is huge.
That's a different chart. Do we have
BYD?
That's Boyd Gaming. I don't know. Is that even listed? Maybe it's not.
I do not know. I'm not sure.
BYD companies. Oh, there we go. This is the. Yeah. So that's the futures, I think, which is on the company stock. Of course, it's something weird like that. BYDDF. Oh, yeah, there it is. OTC. That makes sense why it didn't come up.
Look at that thing, though. Jeez.
That's a good looking chart. And this is what I talk about with bases, right? It would be frustrating, if you bought the breakout of the base this time at 40 and it comes back to 30 again. But eventually, if they can't make it go down for a long time, it generally has to go up. So nice looking push from there. And at all-time highs, assuming this goes back as long as the company exists. So you compare that to a Tesla, which is doing great recently, but not at all-time highs. I talk about it all the time. It's relative strength, right? So, of course, it's 100%. BYD. But I will say, right, if you are going to trade this, now that we know it's BYDDF, the reason that I laughed when it was 5 letters is because if you're 5 letters, you're generally on the pink sheets, which means you're not making the reporting or regulation requirements to even be listed on the NASDAQ, which is like the lowest bar, and certainly not the NYSE, which is the higher bar. So you have China, and then you have the fact that whatever they're doing, because you would a lot of institutions can't buy things on the pink sheets, so you want to be listed on the NASDAQ. So the fact that they are not means that they're just not doing the reporting requirements necessary. So just I don't trust China already, and then I don't trust anything on the pink sheet. So it's a great looking chart. Just be careful.
Yeah, it's a great point you made. Institutional investors, these big dogs can't even get into it, right? And so it's hard to be heavily invested in a stock where hey, the big dogs can't even really step into this and help me out here.
And that's a lot of the problem with a lot of the marijuana names. I can't think of any off the top of my head right now, but a lot of them are stuck on the pink sheets. So you can't, the ones that are listed, like Tilray and whatever, are just garbage anyway. But there's a lot of companies that are doing okay. They're just on the pink sheets, and they just cannot legally get institutional investments, because generally speaking, when you're doing your prospectus, you're saying I'm only going to buy listed securities and blah blah blah. So they can't get massive amounts of money behind them as long as they are on these particular exchanges. So it ends up being problematic that you're there, right? So either you're there, like the marijuana stocks, it's not their fault. It's regulation and the laws and everything that you guys have going on there. But in this case, again, worries me just a little bit.
Yeah, I get you. We had ROST Ross down 0.28%. They beat earnings but pulled guidance. Over 50% of goods come from China there. What's that chart looking like?
They're trading right there now.
Oh,
yeah,
that's rough. That's not too good there.
Yeah, nice looking chart, but again, this is what I talked about. You're at the high end of a base. How many times in my past would be like, oh, this thing's gonna go through, and then whatever they said they did not like. There's the open. Let's just take a quick break and take a look and see.
Yeah.
Because I've been watching. If you see me look down this way, hey Leah. If you see me look down this way the whole time, this is where I've got my futures chart. So we've been holding on ever since we had that little sell because of the news. We've been holding on here. You can see like 1,000 trades I think just came through to buy. So far we're holding on. We're breaking. This is VWAP. We're breaking back through VWAP. So maybe we'll shrug off this news. Who knows? But at least buyers are coming in here a little bit. Yeah, so many trades coming in. Yeesh.
Yeah, we will see. It's been a wild one with the morning. Leah, how you taking? How you taking this morning with all the
I've
the
been
craziness?
short since Monday, darling. I
Oh,
went
let's
short
go.
on Monday at 590, around there, 195. Yeah, and I was posting it in my group too because I didn't like this candle here. Let me share the screen with you actually.
Yeah, go for it.
The candle is not going to tell you anything if you can't see it. All right. 1 second. I have new computer, so it's like all here.
Oh, no worries.
Yeah,
Nice
but
pop,
I
though, in
was
this market into
prepared.
the
It was. I mean, the technicals were telling us the story, right?
Yeah,
So-
we had reason to come in a bit for sure.
Yeah.
I've been trying to continue to. I mean, I've showed up a lot of the days and tried to be the big bad bear, but price action just hasn't really supported it until kind of the end of the week here. We're starting to get some selling going on, but every time I've been trying to be bearish, I'm just like, oh, we're respecting these areas every day, and so I've been kind of flipping my thoughts on the intraday, but no doubt that on the higher time frame, we definitely had some spots to rebalance too. So
Yeah.
happy to hear you're short.
Yeah. I like to hedge when I'm, but I also have a lot of cash now because I sold many things, and I quite frankly on Tuesday was the day we dumped really violently. That was a day when I got out of all my longs. Like
So what you're
literally.
saying is you're looking for the next banger, huh? You're looking for the next good
Yeah, I
name.
had so many bankers this year that I'm almost feeling lucky, and I kind of am superstitious now.
I
don't
know you
want to,
can.
like screw it up,
I get that all the time. Sometimes I get on a streak and I'm like, oh, I'm due for a loss. I got to be careful with my thoughts here.
Yeah, I was, and I knew that, and I made so this is my SPY chart. So pretty much this was Monday, and then I'm like, guys, I don't like this, and I shorted, and then I added on Tuesday. So now this is kind of my this is a weird thing here, but we could fill this gap partially at least, maybe fully, who knows. But honestly, the 8 moving average is above us. I look at that a lot when I do short-term trading. So pretty much from Tuesday, you were supposed to be out of the longs completely. So if not like trying to predict on Monday, I was just looking at the option flow and hedging and all that stuff that I always do, which is very complex stuff, which most people don't do. But this was the sign, and I cut 6 trades on Tuesday. 2 were stopped out, and 4 I just closed with tiny losses because I didn't like that, and I'm glad I did. So for me, the level on SPX that I was really looking at was the 59.10, 59.11, and that's exactly the moving average, but this was just because of options and hedging, and then it aligned with the moving average. So that's kind of where I would go long, again, about the 59.10. I would not touch the market long before, and this is a 200, which is clear we're gonna bounce there. But up to when we're gonna bounce, right? So here I posted yesterday that below 58.34, the pressure might get more aggressive. And this is all based on, again, hedging, option flow, algorithms, right? There are certain algorithms programmed on certain ways. So we are looking at all these things when I do my levels. Again, as I think the price action is happening, what is supposed to be happening, 200, we are bouncing. How far are we going to bounce? Who knows? I am net short on one portfolio. The other ones, I'm heavy cash and I'm hedged. And it's okay. I will get back into the market. Besides, of course, my investing portfolio, I don't usually touch as much, but I will get back about this level, 59.10. Until then, I'm just going to day trade or do nothing.
Yeah. I think
Yeah.
that's
I like that. I
something
like buying
investors
on
can't
strength
do.
like that,
Yeah.
right? I like it's a lot of people. It like you're saying, Jordan. It's hard for people sometimes to buy on strength. They want to catch. They want to say, oh no, I want to find where the bottom is. And generally speaking, you'll see with what Lee is saying, and with what a lot of professional traders is, you have a prove it to me spot. If you get here, then there's some proof that at least the short-term momentum's on my side, and then I'll start to take a look at it. And that spot can change over time. If we just tanked here, I'm sure it would be a different spot as time went on. But yeah, I'm going to sit back, and the market's going to prove to me that there is some strength before I get involved.
Smart, yeah. I mean, look, there's nothing wrong buying dips for investing if you know the financials of the company, you know the company. But just being down a little bit, like, I'm not going to be adding to my long term now. It's ridiculous. Why would I do it?
I was
have
just saying the
enough
same
long-term.
thing. I kind of didn't put as much cash in on the dip as I'd want to, especially being as young as I am. I definitely wanted to have some more cash in the market, but I mean, it is what it is, and we always get another sell-off, right? And I might have to wait a while, and I'm aware of that, but we always get QQQ down 20% again, S&P down 20%, and when it does, I'll be a buyer. But I just, even though I want to, I can't be dipping into the market where we're sitting right now. It would just bring my average up too much, and I'm not a good investor if I'm doing that, you know. So
No, because we were buying on April 7th. That
Yeah.
was the day to buy when with this hysteria.
And that's for the long-term side of me. Obviously, like intraday, like we were just talking about, I'm more than willing to buy something that's already been going up and you know, already has momentum. But it's hard for me on the longer-term side of things for me to.
And
really
that's a
wanna
big
get
point
things
too,
going.
right?
Yeah.
It's all time frame, right?
Exactly.
Like, you know, Lee's talking about her long-term portfolio. I heard the British man from Interactive Brokers just screaming at me off the open of order filled, order filled, order filled. So, you know, I think, like Lee was saying, probably a short-term bounce off the 200-day moving average. I'm very excited, like we talked about earlier, to see the commitment of trader data that comes out on the weekend. I think it's usually out on Sunday, but I think it actually comes out on Monday when there's a holiday. I'll have to check on that, but that will tell us, because as of last Monday, they were short and getting shorter. So the question is, right, have they gotten long enough that the market can dip, or are they going to start buying the dip here? And then, you know, the question is, you got to give it a couple days, right? One day bounce off the 200-day moving average, I don't think is enough to get excited about.
No, absolutely not. Again, like we can fill the gap and dump. Like for me, really, this level is now the level that I'm paying attention to. The 58.34, right? Where I had my level that's aggressive selling start, and it just basically dumped there. The momentum picked up before the market opened, and now, yeah, I won't be excited. As I said, I might just sit on my hands and wait. You can day trade this. This is fun to day trade if you want to. Sure, the bounces are fun. They're quick. But
That's
what
the
your
guy
body's
screaming in my
doing.
ear.
Yeah, exactly. Yeah, why not? I'm day traded out. I day traded more than I usually do this last couple of weeks. Because then like market gets to those levels where I'm like, okay, we're on a super strong resistance. We might dump. I'm not going to swing trade, right? And then I can just day trade. So that's what I've been doing last couple of weeks. And
I mean, it's definitely been more of a day trader's market, I would say. I mean, I don't doubt that there's people that had some swings from the lows and, you know, that are going crazy with some swing trades. But just with all the uncertainty, with all the news coming out, all the volatility, it's a little, I don't know, I feel better just being a day trader right now. But of course, I mean, everybody has their strengths and you play towards that.
yeah, this is a problem,
and
Jordan. Swing trading in this.
Yeah,
That is the worst. But once you break the trend line here, it
Then
was
it's okay.
very nice.
Yeah.
Yeah.
So now again, I'm gonna wait and see. Yeah.
Agreed.
Yeah, and we're range bound. It gets really hard to from the 2 Mondays ago. I think that was the Chinese negotiation weekend or whatever. We haven't really done anything. There's been a couple up days and it's just been in a range, and that's the worst for swing traders. But you're right, you can day trade pretty actively there when the market's just kind of back and forth within these range. But I think again today is a very interesting day, just because this is the first, I would say, real pullback we've gotten since we broke that trend line that Lia put in. So there'll be a lot of information, I think, about appetite to the market. If we scream higher from here, then maybe there is some appetite. If it continues lower, then that means that people aren't that interested. So it's how excited I say this all the time, when you get that dip, you're looking to see how excited is everyone to get a dip. Are they scared that the dip is coming in and they just walk away? Or are they finally saying, okay, now I can start to get involved in the market now that we've pulled back, even though it's only, 3% or 4% from, to 3.5% from that recent high. So if they start to get really involved here, then that means positioning is still very weak. If they let it go and let it drop to new lows, and then they're not, right, they're looking for more lows to get us involved there.
Yeah.
Got any thoughts on UNH and whether or not we're convinced or not? I'll say I'm not convinced at all by this by this bounce from the lows, but it was a nice opportunity to get some trades in for sure.
That was a huge trade
off that
for
May
us.
15th. Yeah, was that a big trade for you?
Oh,
I'm curious on whether we go, where we go from here, whether or not we need to go take out those lows again. I don't see the
don't think
momentum
so.
I'd want to see off the lows, but I also am not seeing the the structure from here that I want to see to go further down. It's kind of just in this no touch area for me. But curious on your guys' thoughts there.
I'm gonna try not to talk my book because I own a bunch from 260, but I think that low was the candle is amazing when you see that kind of technically a dragonfly doji, but that kind of candle I really like. The volume you can see on the chart there was a huge spike in volume, so that's institutional buying. That's not a bunch of retail people getting in when you see a volume that big as well. So I think the trade there is pretty simple, right? You could set a stop under that low if you think you want to buy in through here. If you want it to break that low, then you'd look for it to undercut that low and then maybe rally back through. But I think that 250 area is the big one to watch. As long as we're above that, it could be good. I'm to the point where I said that this was going to be something I was going to buy, I think probably on this show and hold for a couple years, but as the trader and the wuss that I'm in, when I was in at 250-ish and I saw it at 3 something 2 days later, I took a bunch off the table, and now I've just got my stop under that low. So it either holds that low and then I'll be in this for years, or it takes out that low and I'm on to the next thing. Because the thing with some of these bad news plays too is it can do the worst possible thing, which for the way I trade, in my opinion, is not to go lower. The worst possible thing is to do nothing for years. That just ties up capital that I could be employing somewhere else. So if it is going to go low, I hope it just does quickly and kind of knocks me out. So
Yeah, I was in 251 and I sold at 308. Exactly. Because we filled the gap here. That was my target, 307, 308. We were up there pre-market. I sold it pre-market 2 days later. And I kept a little bit as you did for longer term. But I personally, if we would dump to the monthly 200, that would be my other add. I would add more there. And I sold puts there too. So for July.
yes, it was us I was talking about, because I remember saying that was probably the move. Because then you're just getting paid to, if it comes down to a price that you like it, you love it. It's something that I wish I had the guts to do more on names like this, is just to sell the puts. I don't know why it makes me nervous. But yeah, because then you've got 2 good options. You got one, it goes nowhere and you get paid, and then you got the other that it bounces and you get paid. And then if you like it there, then there really is no bad option. So it's something I have to look at more. It's funny, I have a whole 2-year secondary designation, letters after my name on derivatives, and then in the real world just never end up using them. So something I need to explore a little more.
I sell a lot of puts all the time. I really like it, actually. It's to me, psychologically, it's like, okay, am I buying this dip or is it going to go lower? I'm like, well, let's negotiate here. I will sell it where I actually would buy it even $20, $30 cheaper in this case. Plus I'm just looking how much I got for that. Somewhere in my broker.
For some reason, it's such a turnoff for retail investors. I know it's
turn off what, put selling?
Yeah, a lot of the time I just see it's such a turnoff just selling options in general, because usually you're not making as crazy percentages as maybe trading traditional options in the directional way.
But your win rate rockets.
Exactly, man. Your win rate is crazy.
Yeah, win rate is insane.
87% of all options expire worthless. I think somewhere in that area. So
that's all you need to know right there.
I probably sell thousands of options every year. I'm not kidding. Every week. Also on cheaper stocks, right? Like Mara or any of those high flyers with high implied volatility. It's probably a couple of thousand a year. Yeah. And honestly, the income from the options is like an average income in the United States. So I'm like, why wouldn't I do that?
Exactly.
So even if market was horrible in 2022, I would make 10% on my portfolio holdings just from selling options. And it was great.
There were a few
Yeah.
times I was, for instance, holding Celsius when we were almost at $100 a long time ago, and one of our buddies, Paper Gains, was telling me, "Hey, this is not a bad spot to be selling, some cover calls against your position." And I did not do it, but I wish I did, because that would have been a huge opportunity to bring in some cash. And then obviously, if I still like the ticker, I could have reinvested.
That's
or
what,
just taken my cash and
right?
left,
That's what I was
but-
going to say. Is you can take the cash that you
Exactly.
make from selling the option, because selling the option, yes, does have a limited upside. But if you take the cash and you buy the shares you wanted anyway, you make $1,000 on the trade. You buy $1,000 worth of, right, and you keep selling options. It could get to the point where you're, you have a large Tesla position that was entirely funded by selling options and then using the cash from that to
Yeah.
buy shares, right?
Exactly.
I have to be realistic and tell you, since I've been doing this for 6 years and I'm selling loads of those contracts. Yeah, but sometimes things happen. Like me, I went to long Tesla 287, and I sold 330 put call. So now look, I am going to cut myself short most likely. It's for June.
Yep.
So those things can get frustrating, right? I did not expect that Tesla is going to have this move right here, and it's fine. I got $3,000 for that contract, almost, or something
Just go-
crazy like that. So
Go rile Elon up on Twitter. Just start talking smack to him. Get him real loud, and then they'll tank the stock a couple percent. Like, just start making fun of him or something. Accuse him. What
Yeah,
was
he
it?
loves to
Cheating
do
at video
that.
games was one of the latest scandals I remember reading about, that he
What did he
pays
do?
people to play video games. He's supposed to, I guess, and I could be butchering this, but I read something that he pretends he's like really, really good at video games, but instead he pays people to like play the games or get the characters up to a certain level
Oh,
and then
no
plays them.
Is that real?
Which
No
is-
way.
Yeah, there's a whole, I watch, again, it's
I thought
random.
Elon was just absolutely goated at video games. With
You
I
would
could
everything.
hope he
believe
has
that,
better
though.
things to do
I could
with his
believe-
time.
I would
than
too.
to,
I would too. I'm sitting
like-
back thinking there's no way Elon Musk has time to be live streaming this video game and be this level on the video game. It's just, yeah, beyond me. I thought. That's
Yeah, I guess
super funny,
he
but-
pays people to do, again, which I don't, if you're honest about it, you're like, listen, I don't have time. I like to.
I
like
guess
to
when
play
you
the
have
game, so I
fuck
wanna
you
have-
money like that, you can really just do whatever you want, huh? I mean,
It does show the personality type though. If he can't
It
be
does,
bad at
yeah.
anything, he
Yeah.
can't just.
Yeah.
I'm not good at a video game because I run 17 companies and I'm the richest
Ugh.
man in the world. Like,
Yeah.
eat it.
His
But
ego
no, he has
is
to.
pretty strong. Yeah, he can't take loss.
oh god.
But Tesla's probably going to 360. This looks like a nice bull flag here, and it's probably gonna chop around and break out. So yeah, I will be upset because on 100 shares, I'm gonna be, if it gets to 360, right? I'm cutting myself short. Pretty crazy amount. So anyways, that's also the downside. You're not losing, you're just cutting yourself short. And for today, I actually have. I'm actually happy because I have 65 covered calls I sold on Hood, and it seems like I'm gonna keep the shares, so that's good. That's good. But I honestly, if I wouldn't, I don't care because I was getting in around 40, so I'm so much on this one. And yeah, it's a fun game, but it can get really frustrating. People should always sell much higher strikes than they have average price, and also on a very strong up day for the calls, and for the puts on a strong down day, because otherwise it's gonna really be bad, that trade.
I guess that's a good question. Is what delta do you just go based off the chart, or do you go on some sort of
Everything.
delta?
Delta for sure, of course. I go. I wouldn't go more than 0.25, to be honest with you. So basically,
25,
0.25. They say 0.30, but to me, 30% chance is a pretty high chance that I will I will get assigned, or I will be called away on my shares. So I do like 0.25, and I'm trying to get at least, for example, month. I go like month out, and on the high volatile stock like Mara, I go 2 weeks out, because these things can move so fast, and you don't want to be stuck in a covered call if this decides to go up 30, 40%. So 2 weeks. But again, like the premiums are really high.
Yeah, it's funny because a buddy of mine, Options Sean on Twitter, again, he's been options trader for ages. He calls it the 25 delta lifestyle, and that's just what he does. So it's
same
interesting
here.
to see. There must be some logic to that if there's a lot of people doing it. And I guess for the viewers, basically just roughly saying a 25% chance that they're going to get called away, right? You can go and look at it's more of a delta is kind of talking about how much the option moves based off the underlying stock, right? So the higher delta you go, the more money that you'll collect on it, but the higher probability that you'll get your option called away. So that's why I asked the question, is because people who are selling calls aggressively or just using the chart, they're just using pure technical analysis for it. But generally speaking, you want to say, okay, I want to sell it far enough away that yes, I'm not going to collect as much money as I possibly could, but it means I can keep the shares. So that's just what we're talking about with delta. Is it's just a combination of how much money do I want versus what's the probability that my shares are going to get taken from me.
Yeah, on technicals, I always look at anyways. Like I would never sell options without technicals, right? I want to sell them on a support when I'm selling puts. When calls, I want to sell them close to resistance because I have the highest probability that the stock will retest, and that next day maybe I'm up 50-60% and I close them immediately. So the amount of calls and puts I will close next 1 or 2 days, and I have a rule: if I'm up 50% overnight, I'm closing. If I'm up 75% in 2 to 3 business days, I'm closing. I'm not waiting to the end. That is no point, right? So that's
yeah,
kind
that
of
gets
my rules.
into weird gamma risk that might. But yeah, AC Trade I find is a good resource just to get into that, because they have a lot of stats on the closing at certain times, and nice. They've got some good intro course. I'm just thinking if someone's listening to this and they're like, I have no idea what they're talking about. They've got some good like. There's probably a bunch of videos out there too of like what are the
There's
Greeks.
lots. I did so
what
many
do they
videos
mean.
on my YouTube as well for
Great
this.
course.
And I know the tasty trades, I looked at them, they're very good. I looked at them 5-6 years ago, and they do the delta 30. And I tried it myself, and this just didn't work for me. And they do 30 to 45 days expiry. So, after doing this for 6 years, I found my own strategy that works for me. And for me, 45 days is just too long. I feel like I'm stuck for so long. I don't like it. It's too much of a long-term commitment there with those. So, yeah. So I have a shorter frame, but
no, it's a good thing to do, because you can, especially people out there, well, like Jordan, for example, who's very long. You're either a degen day trader or you're very long-term nature. Doing some of these kind of income generating strategies, even small, I find are good to keep you engaged in the market. And then also you can just generate a bit of income, and then if you just want to take that income and just plow it right into the S&P 500, then that's absolutely fine. But I do think this is it's a good game to get into. Spread, if you're not comfortable with naked call put selling, you can do spreads. There's condors. There's all kinds of cool stuff you can do, and I really do think it's funny. There's a whole on Reddit. There's the Theta Gang, they call it, because they're just selling for selling options. And if you go into that Reddit, it's all like ex Wall Street Bets degen that just got hosed, and then they switch over to like the light side, which is selling options. And where you're in Wall Street Bets, they're bragging about how much money they're losing, and then you go to this option selling Reddit, and they're all nice steady equity curves with the occasional dip and things like that. And it's cool to see. It's like the Alcoholics Anonymous of Wall Street Bets. They just move over to Theta Gang eventually if they have any money left to do it.
Well, option selling is more dangerous than buying them, in my opinion, and that's for fact, because if people don't know what they're doing, they can really hurt themselves badly. So I always warn everyone, if you don't know what you're doing, do not sell options, because you are selling the right? So you are stuck, and especially with puts. This is a lot of money. So if people go there just for the profits and look at this hundreds of dollars they get for contract, and then suddenly they need $200,000 to buy all these shares when market takes a dip, then it's really difficult. So
be careful.
Be careful. It's not that easy. You can get in a lot of trouble with that. So, and that's why I teach a lot of people to do spreads. I love spreads. Even hedging with spreads is much safer. You have defined risk. I love to do iron condors. I love to do strategies when I expect that the market will be choppy. That's also pretty safe. So there are so many things you can learn, and I agree. There is something for everyone in the
what's
market.
amazing too? Nowadays, we were just talking about, Michael, how earlier, all these crazy ETFs coming out are kind of a newer thing that wasn't always happening. And it's beautiful too. Like if you're in the audience and you're like, hey, I don't have the time to even put towards trying to learn how to sell options or do any directional trading or any type of trading of any kind, right? There's people out there that are just working too much and they're not in the space. That's where there's so many ETFs now that are literal just those income ETFs where you have professionals selling options, doing the strategies for you. You're not even doing anything, and you're just letting this income be generated by people smarter than you. And I think that's just amazing that we have the ability to just, hey, find some of these ETFs that we like and be able to do that and just leverage somebody else's efforts. And I think it goes overlooked. There's too many investors out there that are not able to be at the market every day that need to be looking at things like this.
Yeah.
Well, it doesn't have to be an all or none thing. So like Jeppy or what, same one. There's a lot of these out there that if you're worried about the market, you could be in something like a Jeppy where you're hedging downside risk a little bit because they're selling calls against your strategy, and then when you're a little bit more confident about the market, you switch back to the SPY. So it doesn't have to be a.
I'm sorry to interrupt you. This one, JPQ, or which one do you?
JEPI, I think, is the most common one. Jeppy or JP Morgan Equity Premium, and it's like a 10 or 15% annual return, and it's the idea is that you're capping your upside, but you're going to cap your downside and you're going to make some income. So what some people will do is, hey, I'm worried about the market, I don't like Trump, whatever is going on at the time. Instead of going from the S&P 500 to cash, you go from the S&P 500 to something like Jeppy, where you're going to get some of the upside, you're going to be hedged some on the downside, and in the meantime, you're going to be getting paid a dividend, and then you just take that dividend, you reinvest it in it, and then eventually, hopefully, you have a better amount of cash than if you just left your money in the S&P 500. And then when you're feeling good about the market, you just switch back, right? So instead of cash and SPY, it's now option income and SPY kind of thing, right?
Did you guys see the Meta Planet this week? Did you trade it?
I did not.
It's the Japanese MSTR, and Japan has much better infrastructure for Bitcoin than the US, and it's like Japan is the shit with Bitcoin. Like these guys are really so much ahead of us.
Oh yeah.
So this is basically,
they always have been.
It's crazy. No, I had no idea actually. I just learned all of this that they're like with Bitcoin. They're like whoa. Anyway, so this is the one I wanted to show you because I always come up with these weird stocks.
I love it. It gets my eyes on things I would never see before anyway. So
Metaplanet is basically Japanese MSTR, the same concept, and they had a crazy short squeeze, and now they dumped back to pretty much where they were on Monday, where I traded it. I was lucky, and now I'm thinking to go back, but it's very risky. And the funny in May, I was talking to you guys that just is like, whoa. I'm up like insane on this one. I was telling you like many times about that.
You must have loved that tweet. That rocketed that.
Crazy. This is my long one. January 2nd, I literally went and I'm like, okay, 250%. So I'm still in, I'm not leaving.
The tweet will give and the tweet will take it away. For those who missed it, right? It basically, Fannie Mae and Freddie Mac got privatized in 2008 because if they went bankrupt, basically the world would end. So the government bought a whole lot of them. And then you had Ackman was buying it recently. And then Trump came out 2 days ago and basically said he's thinking of putting them back out to the public. So making them publicly traded, they're already traded, but making them public companies instead of private again. That's what caused that massive gap of, I think it ended up being an amazing return for the government overall to buy them when they were near bankruptcy. And if they unload the shares that they have back out there and make them a more competitive public entity, that would be end up being, it's a long-term hold, but it ended up being a wicked trade.
Yeah, it's amazing. I'm still in, and I have actually bigger. I have 70% of the preferred stock because that will be preferred if anything happens. And Funny, I may have the rest of my position is in this one. So yeah, this is 250. I'm holding. I don't care. I think this goes to $20 to be honest with you. But no financial advice. It might not. But I'm very happy camper here, so that helps.
And it's way easier to hold on to something like that when you're already up 450% as opposed to buying it now.
Yeah.
If you give back 30%, it's like okay.
Who cares? Yeah.
I'm mildly annoyed, but
German defense is still running, guys. Still, look at this. It
Wow.
just doesn't stop. That was my entry here. And
That's insane.
And I post everything, and now I'm out. 400 was my target. I'm out.
Change your name to Lia the Goat.
I had very good trades this year. Honestly, not many,
Good
but
stuff.
like just like find those high
Less
flyers.
is more. Quality over
Yeah.
quantity. I
Yeah,
love it.
yeah.
I think it's
Or
I
this
think it's
one.
better that way.
Yeah, just find the little high flyers. They make you. It was my other
Yeah,
one
look
last
at
year.
that. Nice.
Real. Yeah, there is
Amazing
many.
stuff.
What happened to Oklo actually? We had Trump was gonna sign some. Oh yeah, wow, it
Looking
keeps
good.
going.
Yeah, nuclear
Ooh, okay.
bills.
Yeah. Oh, okay. I'm not in this one anymore. Oh, I was trading it. I'm not in. It's okay. I'm not gonna cause myself FOMO.
It's
Yeah.
funny, even regardless how good you do, you're always mad you missed
something.
something or sold
course.
something too early.
Gotta
or-
embrace that JOMO, the joy of missing out on things, you know? You gotta
Yeah.
embrace that.
Oh, funny.
Well, a great morning, guys. Leah, I appreciate you coming on, sharing all your trades. I know the audience loves it. Michael, your thoughts as always, and your mind, I appreciate it. And I appreciate the audience for tuning in. It was a fun week. It was a fun show this morning. We're gonna wrap it up for the day, but we got a long weekend. So reminder, markets are closed Monday, Memorial Day. So don't wake up like I always do and realize, oh, I could have slept in. Don't do that. I'll probably still forget and end up doing that, but we'll be all right. Actually, I'm on a flight on Monday, so I'll be up early, but just for a flight. We don't have to worry about the market. So again, appreciate the whole audience. Make sure you guys are liking and subscribing on the Stocktwits channel, and we'll see you guys next week. Have a great weekend.
Bye.
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 Later.